Swiggy is now speeding up its IPO plans. The food delivery giant is reportedly all set to file its Draft Red Herring Prospectus with SEBI later this week. According to media reports, the Bengaluru-based company is eyeing a massive $1 billion raise from this IPO, and there is more. Swiggy is said to have been considering increasing the fresh issue portion thanks to its improving financial health. Let's talk numbers. Swiggy's revenue shot up by 36%, jumping from 8,265 crore rupees in financial year 2023 to 11,247 crore in financial year 2024. At the same time, losses have significantly shrunk down by 44% from 4,179 crore rupees to 2,350 crore rupees. Now, Swiggy's quick commerce arm Instamart is also expanding fast. It's now operating in 43 cities, up from 27 in March of this year, with 11 of those new cities added in just the last 2 months. To help us understand if Swiggy's IPO could be a good bet for investors, we spoke to Mr. Avinash Gorakshakar, Director of Research at Profitmart Securities. Avinash, thank you for giving us time here on News 9. Why is Swiggy now looking to raise the IPO size? Is it on the back of an improved financial performance, or do you think they are planning to build a war chest to take on competition like Zomato's Blinkit and Zepto in the quick commerce space?
I think first of all, my guess is, Swiggy has been monitoring the progress of Zomato quite closely. Now, Zomato is one of those companies which has become profitable at the EBITDA level. And I think, I was just seeing the numbers for Swiggy. Swiggy still continues to make losses. So I think, your question, mentioning that whether Swiggy is building a war chest, I think it looks like, they are building a war chest because even as of now, they're losing money both at the EBITDA level, also at the net profit level. And I think, Zomato has actually got a good trump card their sleeve, because when they launched Blinkit, I remember a lot of people opposed that idea. They were not comfortable in having Blinkit as a part of Zomato. But, as things stand today, Suresh, in metros like Mumbai or Delhi or Kolkata or Chennai, I think Blinkit has become a part and parcel of the ecosystem. And I think I would not be surprised if Blinkit also will become profitable on a standalone basis very soon. And I think that would add to the profitability. So I think Swiggy is now looking at raising a lot of cash, obviously, to ensure that its cash burn is protected, because in this business, cash burns are quite normal. So this is probably the primary reason why the offer is probably a bigger offer. And I think it all depends on what kind of valuation Swiggy finally decides. Because I remember when Zomato IPO had come in, the pricing was pretty attractive. It was about 75 or 78 rupees. Of course, the share did not do well post listing, but then thereafter, the management understood that the market respects data points. They respect the profitability angle of the business, and I think they did a quick kind of rethinking on their business strategy, and I think that is something the markets liked. So I think if you compare both the companies, I think Swiggy will have to prove its point in the market that whatever valuation they come in within a given time period of maybe a time period, maybe a year or two, they would have to come back to profitability, because this business, no investor is interested to burn cash for a very long period of time. So I think net, your answer to my question, building a war chest, and I think how quickly they come to the cash positive or maybe the EBITDA positive number is going to be the first starting point for interest, going forward.
Now, Avinash, when it comes to the quick commerce business, Blinkit appears to be leading the race simply because it exists right now in more markets. But Swiggy Instamart has been quickly expanding operations. It is now operational about 43 cities, up from 27 at the end of March of this year. Do you think that there is customer stickiness in this business, or are user brand agnostic and just want the cheapest item in the shortest amount of time?
Yeah, I think in the quick service QSR space, Suash, my guess is that customers look at the price and the time. See, today you've got competing players like Zepto. I was just reading about Zepto. Zepto is also planning a public issue dilution at some point of time. And obviously, they operate in the same space like what Blinkit does. But Blinkit has got the advantage of having a much wider network. And obviously, it is a more popular kind of, delivery app. So my sense is that yes, pricing is important, but at the same time, quality of service, the execution is also equally important. So you cannot hold a customer only based on price. If tomorrow the service quality is not up to standard, if the execution is poor, then I think customers are not going to go purely on price. So I think it's going to be a combination of price and service and delivery. So I think that is where Blinkit is scoring much better than the other apps which are available in the market.
Now, Swiggy has tried to launch an IPO at least twice in the past. Do you think third time will be the charm? If so, why?
At an IPO because several rounds of funding have already happened in Swiggy, and as you rightly said, this is the third time they're tapping the capital market. I think the key question, Suresh, would be what kind of pricing and what kind of valuation are they going to be offering these shares? Because see, today's investors have become very fussy. They've become very particular about key data points like operating margins, the cash flow, the cash burn. I think when Zomato entered the market, there was a huge euphoria for these kind of startup companies. I mean,
Hmm.
examples like KTM, which came at a significant premium, people still paid money. But today's market, I think people are going to introspect and look at Zomato as a comparable peer. They are going to see how Swiggy stands out in terms of the operating metrics as compared to Zomato. And I think the success of the offer, or maybe the try which the company is going to make, is obviously going to be dependent on this peer comparison. If they stand
Hmm.
out in terms of their operating metrics, if they stand out in terms of their promises, I think then definitely there is an appetite. The investors are willing to bet on such companies because fortunately or unfortunately, the food app space, there are only two players. That is Zomato and Swiggy. So, at least that is one part of the consolation key. It's not a very overcrowded space. There is space for growing, but I think you need to keep your house in order. You need to keep your costs in control. And that is what I think the market should expect from the Swiggy management because you can give the narrative up to a particular point of time, Suesh. But beyond the
Hmm.
narrative, I think numbers and data points are something the market should be closely looking at.